What's up, guys? Welcome to another video. On this episode, we'll be checking out my June 2020 M1 Finance portfolio recap. Also, stick around till the end. There is one stock or one part of my portfolio that's doing better than the rest, and it's probably not the one that you think. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We talk about mindsets, strategies, techniques, and resources that you can use in your journey to build wealth. If you haven't yet, please subscribe. We produce new quality content every week, and we have videos dropping on Tuesdays and Thursdays. Before we begin, I'd like to answer one of the questions I get asked most frequently, and that is, what is the difference between M1 Finance and Robinhood, and which one do you recommend starting with if you're a beginning investor? First, let's break this down. M1 Finance is a cross between a robo-advisor and a traditional brokerage. Robinhood, on the other hand, is not a robo-advisor or any sort of robo-automatic type of investment platform. That in itself is one of the biggest differences between the two. For example, with M1 Finance, you're only allowed to set allocations to your pie, which means you decide what percentage of your portfolio a certain stock or fund takes up. Robinhood, on the other hand, lets you buy each stock or fund for as many price or shares as you'd like. Another difference is the orders that you place in the two different brokerages. M1 Finance only has one buying window, and that's at 9:30 a.m. Eastern Standard Time, whereas Robinhood lets you buy whenever you want. And with Robinhood, there's some added flexibility. You can do a market order, which is an order placed during the market hours of operation, which is 9:30 to 4:30. You can do limit orders, which are orders that can be placed during the market open hours, but also outside of the hours. There's also a whole bunch of different types of orders that you can do with Robinhood that you can't with M1 Finance. M1 Finance is good for beginners because it's very easy to start. All you have to do is decide what types of stocks or funds you'd like in your portfolio, set percentages to each, and then start contributing money. You don't have to think about when it's going to buy your shares, because after you have at least $25 in your account, it'll automatically buy the shares for you. If you're on the basic account, then there's only one buying window, which is at 9:30. If you upgrade to the higher tier M1 Finance account, then there's two buying windows. This is a big difference, because if you're looking to buy shares at lower prices or sell at higher prices, then M1 Finance isn't the brokerage you'd like to go with. That's because everything is automated. There's only one time to buy, and if you want to sell, it'll share at that one time also. Robinhood, on the other hand, lets you buy and trade during market hours. That means that if the market opens and you see that a stock has dipped a lot, then you can buy that share. Also, during lunchtime, let's say that the stock that you just bought has skyrocketed. You could sell it if you'd want to get rid of your shares and keep the profit. That's where the flexibility comes into play with Robinhood. However, one of the biggest differences and biggest advantages to M1 Finance is that when you open up an account and you start with $100, they allow you to start investing in fractional shares for companies. Robinhood, on the other hand, doesn't allow you to do this right away. While it does have the option to invest in fractional shares, you have to get onto a waiting list before you can even start to use this feature. For those of you that don't know, fractional shares is another way to buy stocks or funds. Previously, you were only able to buy one share of a company. For example, let's say you wanted to buy Tesla, you'd have to buy one share of Tesla to own any sort of equity in the company. If the price was trading, let's say at $600, then you would need to have $600 in your account to buy the share. Fractional shares changes the game because you're not required to buy one share. What you can now do is buy the share for the amount of money that you want. Let's use the same example. Let's say Tesla is still trading at $600, but you don't want to buy a full share. What you want to do is buy only $100 worth. In this example, you'd own around 17% of a Tesla share. This is huge because now you can start investing in some of those larger costing companies with little money. Another reason why fractional share investing is a really big deal is because when you have that enabled in Robinhood, it allows you to enable DRIP, which is a dividend reinvestment program. When you get dividends from your stocks, it's income that you get. This is passive income that the companies give you for investing in them. What's nice about the dividend reinvesting plan, or DRIP, is that once it's enabled, it'll take the dividends and reinvest it back in your portfolio. This is great because that means that there's no money left on the table and nothing for you to think about. All the money that you get gets reinvested without your input. M1 Finance, on the other hand, is a little bit different. Instead of reinvesting it into the same company, it reinvests it into your whole portfolio. For example, let's say you got $1 worth of dividends from Tesla. That dividend would get reinvested back into Tesla under the Robinhood brokerage. However, for M1 Finance, if you got $1 worth of dividend, M1 Finance has a different type of reinvestment feature, and it's called Auto Invest. It takes that money and spreads it amongst all the shares or all the stocks in your portfolio. So if you have 10 shares in your pie, it'll put 10 cents into each of those stocks. All right, guys, enough about those. That's just a quick clarification. I know a lot of people ask, what's the difference and which one do you prefer? My answer would be, for someone that's not looking to actively trade and to just start investing in the market, then M1 Finance is the way to go. All you have to do is set your pie or your portfolio, start contributing, and it'll do the rest. Some of you may know that I'm a big proponent of dollar cost averaging, and that's all you have to do for M1 Finance. Set your portfolio, start contributing every week or every month, whatever you can afford, and it'll invest for you. In this video, I'll show you the exact stocks that I'm invested in for M1 Finance, and I'll show you how this exact strategy is working out for me. Stick around, let's go check my account. Alright guys, here's an overview of my M1 Finance portfolio. As you can see, the current value is $995.80. I'm showing a total return of $89.02. Here is a breakdown of some of the stuff I have in my portfolio. Berkshire Hathaway, this is an expert pie, and as a reminder, this is a template or an expert pie that I just added to my portfolio. Anyone that's starting in M1 Finance can do the same thing. Okay, other than that, Tesla I have in my portfolio. As you can see, I'm seeing really good returns on it. With all the news happening on Tesla, Tesla's been one of the best stock options that I've had. Same thing goes with Shopify. It's currently valued at $33.26 in my portfolio, but if you go into it, I only put $21.88. I've seen a return of $11.40. The last individual stock I have in my portfolio as one of my main holdings is Realty Income, and this is one of those good dividend stocks because they pay you monthly. I'm very bullish on having ETFs in my portfolio, and two of the ETFs I have is VTI, which is the Vanguard Total Stock Market ETF, that I'm seeing a total performance of 16% increase. I also have my Vanguard High Dividend Yield ETF, which is VYM. That's also seeing a pretty good increase. And then I have two smaller pies in my portfolio. One is the Dividend Aristocrats. So as you can see, I'm up slightly at 2.5%. And if we go into that actual pie, you'll see that I have basically all of the Dividend Aristocrats that's listed on the S&P 500 Dividend Aristocrat list. These are all great companies. As a recap, Dividend Aristocrats are companies that have increased their value in the last 25 years. So these are very stable companies that have shown historical growth. The other type of pie I added to my portfolio, or sub pie, is 5G stocks. This I went into great detail in another video, so if you haven't watched that yet, go check out my channel for the stock video on 5G stocks. If you haven't watched that yet, go check out my channel for the list of 5G stocks and why I'm adding all of these to my portfolio. You'll see I have Applied Materials, Nvidia, Qualcomm, China Mobile, Nokia, Crown Castle, Marvel, so a whole bunch of companies that I think are going to show great increase when the 5G revolution comes. Alright, and the last thing I want to show you is the overall performance of my portfolio. As you can see, my net cash flow is $910.46. The market gain or increase I've seen in my money because I'm investing is $85.34. I've earned dividends, which is passive income, of $3.68. So one thing that I think that's important to know is that if I had put this money into a bank, then I'd only have $910.46. That's because when your money is in a bank, it's sitting on low interest, which is not good to grow your money. That's why I think it's very important to invest your money wisely. Alright guys, that's all I have for this video. As you can see, I'm seeing some pretty good performance in my portfolio in the June 2020 recap. Let me know what you guys think, and if you think I should be adding any other stocks to my portfolio. Generally speaking, I think this is where I want it to be, so I'm not really looking to add more stocks to this portfolio. Rather, I'm just going to add money and see how it grows over time. Let me know what your thoughts on M1 Finance are and whether or not you like it over Robinhood. Again, this video is to illustrate that once you set your pie and slices in M1 Finance, you can just start contributing and see growth over time. Thanks again for watching, guys. If you haven't yet, please like, comment, and subscribe. Your support really goes a long way to helping this channel. See you on the next one.